I want to discuss the recent talk that Airbnb might cause a collapse in the housing market. Now, with so many rumors just flying around, it's important that we stick to the facts. This especially caught my attention because I'm a general partner in a real estate syndication fund that actually holds over 120 Airbnb properties. Now, even though they're all performing well over expectations, beating revenue and occupancy, I still wanted to see what all of this talk was all about. And in this video, I'm going to share what's currently happening in the world of the short-term rentals and its potential effects on the U.S. housing market. Before you get started, if you're new here, I'm Dr. Jeff Anzalone, not an STR expert, but a periodontist on a mission to get you out of the rat race. Do me a favor, download the free passive income guide with the link below this video. Now, more than likely, you've heard of Airbnb. Maybe you've used one yourself, or maybe you have one, but you've probably at least heard of it. Now, there's talk that Airbnb property owners, all right, so here's the talk. Airbnb property owners are seeing their income drop in half, by 50%. This is due to two things. This is due to oversupply. There's actually too many available properties. That's number one. And second, there's not enough demand. That's the news. That's what we're being fed. That's the clickbait. That's all the stuff that's out there. So because of this, some people out there are suggesting that Airbnb property owners are going to have to sell off their homes because they're just losing too much money. They're losing half of their revenue. Okay. Now, if that happens, they say that if that happens, there's going to be this surplus of houses for sale on the market. Okay. So if they're seeing all this drop, they go out, they all at once sell their homes. There's going to be a nationwide surplus of homes for sale, which could potentially lead to a crash in the housing market and cause overall home prices to fall significantly. Okay, that's what we're being fed. So let's break down the situation, look at the facts, and see what's really going on. Now, when this came out, Airbnb made a response. Okay, so let's take a look first at how they responded in light of this information. So according to their spokesperson, Sam Randall, he disagreed, stating that more people are using Airbnb than ever before. In fact, he states that booking for stays and experiences actually rose 19% in the first quarter of 2023 compared to the same time last year. All right, so that was Sam Randall. That was Airbnb's official stance against what's being publicized. All right, of course, they're going to want to make it as positive as possible. So let's look at some independent data. So you have a company out there called Airbnb. They go through and they gather information on all short-term rentals. They've been doing this since 2014. They go in and they scrape all this data. So this is independent. This is separate from Airbnb, VRBO, anything like that. Now, their findings actually tell a different story. They actually report that revenue for each listing has dropped 3% year over year since 2014. Okay, let's break this down a little bit. Yes, the revenue for each Airbnb listing has dropped by 3% compared to last year. But we're in 2023. Keep in mind that 2022 was an absolutely booming year to begin with. Plus, this 3%, as they stated on their website, is an average. This does not represent every city throughout the US. So, for instance, you may have an Airbnb that you rent out, let's say in Tampa or Orlando, that's just killing it. Okay. Or you may have one in Houston that's just booked solid. And yes, there are cities where the Airbnb game right now isn't as strong. So remember that the overall revenue per listing is down by 3%. But it's not all doom and gloom as you think, as you've been told it was based on the information, again, that we've been given. So the big question now is, what's the future look like? Jamie Lane, the head economist at AirDNA, he actually forecasts that the revenue per available room might fall another 1% to 2% in the second half of 2023. Lane is actually forecasting fewer Airbnb bookings, but slightly higher prices in 2024. Basically, he's saying that growth is going to be basically stagnant, which aligns with Airbnb's own predictions. So while there's no one denying that revenue per listing might take a little bit of a hit, they're not expecting it to completely nosedive either. So the big worry is whether this push Airbnb property owners to sell off all their properties in a desperate rush and trigger this market crash that we've been told about. But before we start to panic, again, let's look at the actual numbers. In the United States, there's actually 144 million homes altogether. Of these 144 million homes, 1.2 million of the 144 are short-term rentals like Airbnb, VRBO, etc. So when you do the math, that's less than 1% of all homes in the US. Specifically, that's 0.8% of all US homes are short-term rentals. Okay. Now you kind of seeing how things are starting to making the calculations. So even if things go south, not all of these property owners are going to necessarily sell their homes. We're talking about a fraction of the 0.8%, which in the grand scheme of things is like a tiny little drop of water in a giant bucket. So it's not likely to completely disrupt or shake up the whole US housing market. So imagine that you own a short-term rental and you're starting to see your earnings drop. What can you do about it? Well, you got four main choices. First, you can wait it out. You can just grit your teeth, wait it out, hoping things improve, okay? Second, remember, you own this home. You can actually convert it. You can convert it from a short-term rental into a long-term rental, which is going to allow you to rent out your property on a longer-term lease, maybe like a one-year lease, okay? Third option is you can actually try to make your listing more attractive. That could mean redecorating, maybe dropping your prices a little bit, or anything that can make your place more appealing to guests. And of these four options, last but not least, you could just decide to cut your losses and sell your property. Now, I don't think that every Airbnb property owner is just going to jump. If they start to see the revenue drop, they're just going to jump and sell at the first sign of trouble. I'm hard to believe that. So I'm just putting myself in their shoes. Now, it's true that hosting on Airbnb is getting more competitive as more people are joining the platform, which actually means more choices for guests. But at the same time, the number of people looking for short-term rentals is also increasing as well. So here's the deal. There has indeed been a 3% drop in average earnings per Airbnb listing. Now, it's important to remember that this is just an average. Certain places may be hit harder than others. However, these figures don't back up or support the theory of an Airbnb scenario triggering a nationwide housing crash. Now, if you're hoping for one, maybe you're wanting to get a house on sale, then you're going to need to see a situation like what happened back in 2010, where there was actually 2.9, almost 3 million foreclosures throughout the US. Now, pretty much all of these were dumped all at once out on the open market. That's a massive number, considering right now there's around 6 million homes sold per year. So half of those went into foreclosure back in 2010. Now, it would take a huge increase in foreclosures of this magnitude to really cause a market crash. Now, it's true that foreclosures, they've actually increased. So they're actually up 14% this year compared to 2022. But we're only expecting around 130,000 foreclosures this year in 2023, which is nothing compared to the 2.9 million that we saw in 2010. So even if every short-term rental property in the US, all 1.2 million of them, were sold off, we'd still fall short of the 2.9 million mark. Now, in my opinion, a housing market crash is going to require much more widespread economic damage. So the short-term rental market, including Airbnb, simply isn't big enough to cause a crash on its own. What we would need to see is like a severe recession to trigger a crash, not just some of the things going on with Airbnb business. So let's talk about the elephant in the room regarding the short-term rental regulations. So there's a handful of cities across the US that are actually pushing back against Airbnb. Right now, there are around 30 major cities trying to tighten regulations or increase taxes for short-term rentals, which can actually discourage people to host their homes on Airbnb. So for instance, in New York City, they actually passed a law in 2022 that you need a particular permit to actually host on Airbnb. Now, this was supposed to be enforced from July this year, but Airbnb actually hit back with a couple of lawsuits. They claim that these new rules would basically outlaw short-term rentals because of all of the different red tape that's involved to get on their platform. So far, only about 20 people in New York City have actually managed to jump through all the red tape to get the necessary permits. Now, the city is actually holding off right now on issuing any fines until after September the 5th. Now, this is important because other cities could actually follow suit. Now, they might try to discourage people to host on Airbnb with stricter regulations and or higher taxes. Now, depending on how this plays out, it might convince more Airbnb property owners to actually sell. Remember though, if you think back, similar regulatory challenges were actually thrown, very same scenario, at the different ride sharing companies like Uber and Lyft a few years ago. And we know how all that ended up, right? So also, a good chunk of Airbnb listings are what's called owner occupied. This means that the hosts, they're not renting out their entire property, or it could be somebody's second home or vacation home. So these hosts, they're not completely reliant on income from Airbnb to keep their property. Now, I get that if they lost that income, it would be maybe a blow to their financial situation, but it doesn't necessarily mean that they're going to rush out and sell. Plus, again, the market size of Airbnb just isn't large enough to cause a housing market crash. So, for example, in New York City, there are around 40,000 Airbnb listings versus 3.5 million housing units. So, if every single Airbnb property in New York was sold, it would only bump up the housing inventory by about 1%. That's just not enough to crash the market. Now, I get that housing prices are continuously on the rise, making homes less affordable than ever. Plus, don't forget to factor in the interest rates. Right now, they're around 7.5%, making it tough for really anybody to keep up with their mortgage payment. But rather than pointing the finger at Airbnb, consider maybe looking at some other things that are going on. Maybe looking at the large corporations that are out there buying up all these properties. Or how about the Fed causing inflation by printing trillions of dollars? Now, by doing this has actually pushed up the cost of building materials and labor for new homes, not to mention their role in hiking up interest rates. So the truth is, we're in the middle of a housing shortage that's actually expected to last the rest of the decade. Now, I get that it might gradually get better year after year, but it's not going to be a quick fix. And anytime you hear something that's going to potentially crash or potentially affect your portfolio, make sure that you take a breath, stay calm, take time to actually sift through the facts like we've done today before you start overreacting. Do me a favor, curious to see what you think about this. Leave your comments below the video. Take care.